Good Sunday evening to you all. It's time once again for our weekly Sunday communion. What's going on, investors? Hey, I'm happy to see you. Busy, 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 busy as a bee. I'm fluttering like a bee. Look at my new shirt. Check it out. I don't know what it is, but I like it. So I hope I'm streaming, sounding good to all. Give me a thumbs up if you're enjoying this, and if you like, I don't know, if you like dividend investing. You know what's a funny thing is that I'll give you a chance to answer. So the funny thing is that my wife was just talking about these on shoes. Let me know in the comments below, wherever, if to the side, I think this way, if you have on shoes, they are a really interesting looking company. I looked at them a little bit, but they don't pay a dividend. So immediately I'm kind of like, forget them. I'd rather look at Nike, which does pay a dividend. So I'd love to know, like, how do you handle that when you hear somebody looking at a product? And I've been seeing these on shoes a lot more. I mean, would you invest in a company like that? So part of me was like, well, my wife wants a pair. I've been seeing more people with them because once you find out about something, you want to buy, you notice something, there's a psychological effect. If you see a red Toyota or you think about a red Toyota, it's like all you'll see are red Toyotas. So, yeah. Anyway, thanks once again. Hey, my name is Russ. This is a little old channel, Dapper Dividends. And this one is really cool. So, if you get the newsletter, unfortunately, this is going to be rehashed for you. And if your name is Ryan Williams or Harris Elliott. But yeah, I'm just finishing up with Guy Spears, The Education of a Value Investor. Highly recommend it. I have a link below. That's an affiliate link to Amazon. If you just can't wait, you got to buy it. I'd get kicked a few pennies, but I'd suggest going to the library and getting it. It's just over 200 pages, and it is just chock full of fantastic ideas like the one that I'm going to share to you. And I want to know, what do you think about this? What is your opinion on this rule? He has a chapter toward the end. There's a bunch of rules that he tries to follow. So this is one of those rules. And we'll talk about on if you want. I know they don't pay dividend. I see you, Leah Dorian, like the Mandalorian, but the Leah Dorian. That's pretty clever if that's what that indeed is. So without further ado, we're going to get through this one lightning quick. I promise you it's going to be a very quick idea. You should probably not see me on the screen. Oh, you'll see me on the screen. Okay, so here it is. I'm at the, hi, Guy. That's Guy Spear up here. So he said in his book, The Education of a Value Investor, if a stock tumbles after you buy it, don't sell it for 2 years. So for me, this is crazy. I feel like the universe is listening because Nexstar Media has been dropping like a summer gum. It's down almost 25% over the last month. The bulk of this is from the Disney Charter Communications Tiffle? No. Riff? No. What do I want to say? Tiff? I guess just a tiff. It's a dust up between the two, between the streaming and the carriage fees. So, yeah, it's not been good for Nexstar Media. And I've been nervous. I'm a human being. So, Guy Spear tells us, in his opinion, that, and he got this from the one, now late great, Jesus, don't put him in the grave yet, from the one and only, the great Monish Pabrai, who has an emotional circuit breaker built in where, before he buys the stock, he assumes that it's going to drop 50% at some point. And if he's not okay with it dropping, he's not going to buy it. But if he is, then he's going to hold it. And no matter what happens, from what I understand, if it drops, then he will not, if it tumbles like we've seen my Nexstar do, which is the number 3 position in the portfolio, he will not sell it for 2 years because, as I've been emotional about it because I'm a human being. And when you're emotional, you're not thinking rational. So yeah, it's just that really nice emotional circuit breaker that they have built in. And again, you got to be okay with it falling by 50%, wanting to hold on to it. So yeah, I'm gonna address that, Shamir, really quickly. uh, in a minute. But anyway, so his rule, the Guy Spear rule is, and I love this, and I'm adopting this immediately, is that before buying any stock, make sure you like it enough to hold on for at least 2 years, even if the price halves right after you buy it. Again, I'm just such a big fan of this line of thinking, and to have read it the day that I was experiencing some of these emotions is just really, really awesome. And you got to feel like, is the universe listening? So that's pretty much it. That's it, ladies and germs. If I could steal a saying from one and only Mr. Tim Ferriss. And I'd love to know what you guys think about that. So yeah, it is interesting that a little bit of optimism came out. There was a report. Actually, I could, well, I don't know if you're interested, but it was from markets.businessinsider.com, where they are saying that Nexstar Media could be one of the winners from this fallout, because what they think is going to happen is that there's going to, well, this won't be a Nexstar Media. Don't worry about it. I'm more interested to hear what you guys think about Guy Spears' rule of really not selling. Well, I did make an exception in the newsletter. I said there's always got to be exceptions to the rules. And if it turns out that Nexstar Media is at the center of a child labor meth lab and drug distribution ring, I think that's probably grounds to go ahead and sell them immediately. If it's something crazy, but if your thesis largely remains intact, and this is what we're seeing with Nexstar, in my opinion, is that they're still a great managed company. They're still a cash flow machine. They're still the largest local and local news and entertainment broadcasting company in the United States, and nothing has changed except the market, Mr. Market's perception that their revenue stream is going to be negatively impacted in the future. But that has not come to pass yet. And also, to give a shout out to Guy Spear, another thing he's taught me in this wonderful, wonderful book that hopefully a lot of, that's my skull. You guys remember Spicoli? Was he on the phone with, that's my skull? With a Chicago accent doing Spicoli. I don't remember what movie that's from. Not One Crazy Summer. Not Better Off Dead. I don't remember what somebody put it in. Anyway, so you see what happens here, people, how I just can get thrown off. I had the cherry on top as I'm struggling here. I'm trying to buy time for the old noggin to just crank it out. And it's probably going to have to come to me because, I don't know, like a fart in the wind. I think it's gone. But 2, 3, 4, 5. We give 5 more seconds. It's not coming. It's not there. So we'll see if the thought comes crawling back. It was a good one though. I tell you that. So I'm going to get to your. I want to hear what you guys are saying. I love this, and I look a little different on there because there was this new toggle on StreamYard, which I'm still on the fence about continuing using. And it said, improve my appearance. I clicked it and there's like a filter on me. So I don't know if I'm moving slower, but good. Glad I'm loud and clear. God bless it. What was it? Guy Spear. You see what happened? I'm knocking myself on the head with the book. And I knocked the thought right out of my head, I think is what happened. So let's see. I'm going to get to your comments. Let's see here if we can finally do this one and for all, get caught up quick. If you want to know anything, if you want me to look up something, let's talk about it. I'll see if it looks interesting or not. But if I was going to start in UPS or Waste Management, I would think Waste Management because they have more of a moat. And dude, Dividendology had a great tweet where he showed that as their yield keeps going up, I think the payout ratio keeps dropping. Just indicative of such a strong business. So they're not, what does Harris say? Trash is cash. So what the hell was it? This is bugging the heck out of me now. Oh my God. I got to go and goof around and knock myself on the head with a book. Shows you what. All right. What is okay, so we got to that. Shysters peddling you. Hey, I don't know, Shamir. Are you talking about TSLY? I've been seeing a lot of TSLY videos, and I was going to do a short on it to warn everybody and say, and I tweeted this out. I could probably put the info from their fund. The prospectus is that they say right there that they may return capital to the shareholders, which will negatively impact the net asset value. So literally, part of your money that went into the business or into the fund, excuse me, is being given back to you, which is lowering the net asset value of the fund. And it's like, this is ridiculous. 60%, what is it? 40, 50, 60% yield on it. And I'm just like, no way, no way. All right, good. So we got what did I say your name? The Mandalorian, but the Leodorian? I don't know. On shoes? Not for running. Good. Yeah, that's one that might get a few bucks from me for as a non-dividend growth stock, kind of like my Hero Health, which has not been doing well either. But again, taking a long-term focus here, trying to remain rational and look at the numbers. And again, Mr. Market and his irrationality, right, can give us a better time to buy. How is the price of a stock, or for that matter, ETF, determined based on what? So I don't know if you listen to the Barron's Streetwise podcast, but Jack Howe just did it was a couple, maybe 4 or 5 episodes ago, had an awesome answer for exactly how the price of an ETF is determined. Well, stock is just buying and selling, and an ETF, correct me if I'm wrong, anyone watching, is that it's very similar where you have market makers that can buy it based on, what is it? I think it's kind of like the net asset value. So if it's trading if there's spread on that is trading too much in one direction, they can either buy it or sell it, and it kind of keeps like an equilibrium. Yeah, I'm not 100% certain on the intricacies of the ETF like that, but for the most part, most of them track indexes, right? So, that's, I mean, we could get into it, I guess, if you guys want to shout out your thing. Yeah, Google doesn't pay a dividend. I think they will be the next one to pay a dividend. Quite honestly, that's a major company. Yep. On is in growth mode. Yeah. And I wouldn't expect them to maybe ever pay a dividend, but 100% they are in growth mode. And it would literally just be, that next shoe that could potentially just blow up and, I don't know, be like the Celsius of shoes or something, right? Oh, good. You read the newsletter, Rick. Thank you. I really appreciate that. Well, that sounds awful. I really appreciate that. Let's get those vowels enunciating, huh? Yeah, AT&T. Really, that was the one from today, right? Made you think of AT&T. And yeah, so it's not always going to work out, obviously, but I think in a lot of cases, but no, maybe it will then. I mean, the only caveat I would add to Guy Spear and Monish Pabrai, and who am I to add exceptions to their rules, but it would be that there's always got to be something. Like if you invested in, if I invested in Hero Health because of what they're trying to do in the eye care drugs, the ophthalmic, I can't say it. And all of a sudden they're like, hey, everybody, we've just sold all our ophthalmic drugs, and we're going to be a EV company. We're going to make lithium batteries. I'd probably be like, yeah, that's not why I invested in you guys. So I think I'm out. So I think we always got to do that. I was just looking at myself there. Fun. I just have these spats of like, I don't know, it's anxiety or something. I get like, I don't know how to describe it. I get like, especially for this, I get really excited to just talk to you guys and hang out, and I want to answer your questions and be on point. So I kind of build it up, and I think you've seen that a few times the last few episodes, right? I kind of get like a really excited feeling, and I can't think. So, hey, that's fun. If I ever passed out or something on camera, that would be unique, right? Oh, anyway, I'm sorry. Stan. Oh, yes. We got a runner friend here, Craig. What's going on, man? Still have yet to watch The Last Dragon. We're going to get to it. Eventually, we'll get to it. On shoes look like a fad, dude. That's awesome to hear, because this is in your wheelhouse, right? They claim to be from runners, but here's other runners that aren't. Yeah, it's kind of like, wasn't it New Balance shoes were for running, and then it's just like you'd see overweight, middle-aged 40-something dudes wearing them, not running. You know, that's really interesting to know that they might be a fad. Oh, okay, here you go. So if the same stock is 150 and 3 days later it's 102, well, for a stock, it's like a market, man. It's just like eBay. It's like an auction, just buying and selling. It's just second by second auction, whatever somebody's willing to pay. So the highest that somebody's willing to pay and the lowest that somebody's willing to pay, right? That's the spread. And then usually somewhere in between is where it gets executed. There you go. The Leodorian Mandalorian. Okay. I like it. What's face blue smiling, dude? I don't know. I hope I don't have a blue face. I mean, I did this filter there, so it's kind of got the 11 isn't looking as prominent. But hey, that's something that comes with age. I don't know why I always do this. We're in our weekly Sunday night communion. Must be why. Cowboys and Giants are playing. So shout out if anybody's got them on in the background, or you have anybody on your fantasy team. I have Tony Pollard. So yes. All right. I got to get caught up with you guys. Thank you for the podcast with the Dividend guy. Yeah, he's great. I will say, and I'm going to ask you guys' opinion on one more thing too. So I'm not a professional at this. I love talking to people. I got more guests lined up that we're going to get to, but I had my wife listen to some of it, forced her to listen to some of it. And she said a lot of time I'm letting the guest talk too long, but I also don't want to like interrupt somebody. I don't want to like jump in. So we'll see. I don't know. Do you think, is it any kind of a distraction letting the guest talk a little bit long? I'd love to know that. Yeah, I saw this earlier. You saw stay away from Nexstar. The same reason for T and VZ. It's similar but different, and it is definitely in the entertainment. And like I said, they are trying to branch out way beyond that, especially with ATSC 3.0. They want to be the gorilla in the room, the big, already established moat when this thing eventually comes to fruition. But I can understand and respect that, man. Just kind of like how some people don't invest in mortgage REITs or banks. I mean, that's why it's personal, right? So I can understand you guys not wanting to be in on cable and streaming, but I don't think I made the point is that the skinny bundles, right? That's what could be coming out of this with Charter and Disney. And if the skinny bundles hit, it will almost be like a buffet, just going to the buffet and picking the channels, the cable channels that you want, and not paying for the ones that you don't want. Kind of like how, I think this is where one of the big sticking points is with Disney, is that I think I read or heard that it's about $4 billion, I think, that ESPN or their streaming brings. So yeah, I don't know if they'd be able to pay that dividend anytime soon if they lose that kind of revenue. So ESPN, I think on its face is really expensive, but all the other cable channels kind of, I think they kind of obscure how expensive it is, and they eat into it. So if a sports fan wanted to buy just ESPN on itself, it might be $15-20 or something like that or more. But when it's lumped in, a lot of the cable channels help disguise that a little bit. But I like it. Some of you guys like, I'm not big on telecoms, and then Kevin buys more T and VZ. So hey, you go, man, with that face blue smiling. I don't know if that's for AT&T or just, I'm not seeing it. I think it's the blue smiling face. I'm just goofing. On my end, it says face dash blue dash smiling. Nike is entering the buying zone. I think so. I was hoping they would get back into the 80s. Yeah, I might sell some stuff for them, but yeah. Okay, here we go. Your opinion on Guy Spears, Fast Eddie. Thank you. If you hold this, and by the way, this was what we were talking about. Just anybody knew this was pretty much um, this was the whole point of it. Guy Spear in his book, The Education of a Value Investor, said if a stock tumbles 2 years after you buy it, if a stock tumbles after you buy it, don't sell it for 2 years. So that's kind of what we were talking about and how I'm adopting that. But Eddie, I like it, man. You said if you hold a stock for 18 months and you're still not willing to buy more, it's time to get out. Yes and no. I actually just did this with General Dynamics. I sold 10 shares. I've had them since the pandemic, haven't added a single another share, but it's in my self-directed IRA, which is pretty much like a locked account, meaning that I had to roll over retirement money from a 401k through my employer. I sold mutual funds, converted to $30,000 of cash, and then rolled it over to this self-directed IRA at Schwab. And I think that was in actually right around the pandemic crash, I think April or so of 2020. I haven't put one penny into that account. So everything in it is total return. I've done selling, I've done some options, but I'm really trying to use that to get more into the REITs like Realty Income, and Vinci's in that one. Yeah, I had to think it was in the Roth. So I'm adding the Realty Income and Vinci. I'm going to get to 100 shares of Vinci. Interesting. Yeah, YouTube streaming could kill cable. Nexstar Media has some deals with YouTube TV going on. I know they're going to try and get the CW onto that. I know a lot of people are laughing, but dude, Nexstar brought over Mike Baird, who's from Fox. He was with them for over 20 years, and they're trying to turn the CW, which they essentially assumed their debt, but after they're carrying it as I was looking through the financial statement last year, dude, it's actually a $55 million asset. So it's almost like no, not a lose-lose. That'd be awful. It's a win-win is what I'm trying to say with the CW, but they're getting live golf on it, ACC, college football and basketball, the NASCAR Xfinity Series, reality television, trying to get away from the scripted. They're really just going to try and clone it to be like a Fox and then get News Nation on to have their stuff in the morning. So anyway, it's kind of interesting to watch what they're doing with that. And by the way, they got a 75% stake in the CW. Shout out if you like steaks, the kind you eat. But they got a 75% stake in the CW, and the other 25% was between Warner Brothers Discovery and Paramount, which they split. So they each have, I think, 12.5% is what half of 25 is. Thank you. I'll salute my Cook County education that brought me up. So yeah, they wanted to get out. There was a bunch of debt on it. 100, I think Nexstar assumed like all the debt on it, and like 120 some million, maybe. I think it was 120 some million was the debt on just the CW, and it was kind of struggling. So that's what they want. Less superheroes, more live sports and unscripted entertainment. So it's possible. It's possible, John. Oh God. Are you talking about the Buggles, which was the first video on MTV? The Buggles, everybody. Video killed the radio star. Thank you. Fast Times. All right. I'm too far behind. This is crazy. This is crazy because, yeah, lights on, but no one's home. Yeah, the engine's running, but nobody's behind the wheel. Let's not do that. Cade. I don't know Cade. Is that, I'm assuming that's a stock, right? Oh my God, I just heard my Chicago accent. What do you mean Chicago accent? Oh, Cadence Bank. 4.3% yield. We'll look at it in a minute, maybe. I want to get caught up. So Snap-on. I wish I wouldn't have sold Snap-on. Do you guys, has any one of you been buying Snap-on? I was starting a position in it. It shot up, and oh, my friend's here. Hey. Psst. What are you doing? I'm on live stream. It's my cat. Should I grab him? Whatever. He's doing his thing. We got an open window. So, what was I saying? Good. I'm too far back. All right, I'm gonna get caught up to you guys. Hey, what's up, my buddy Darth? Darth Dividend. We were just talking about. Oh no, selling Target. What are you selling Target for? Do you have a better option, or are you just done with it? All right. I'm gonna get caught up to you guys right now because that would be annoying as hell. Hey Russ, I have a thing to say, and then the dude gets to it 15 minutes later. I'd be like, yeah, I'm out, dude. Kevin, you're slipping in quietly. Oh, that's interesting. They're going into Pepsi. Yeah, they're starting to drop down to 176-ish. 5. I don't know. If they get my cost, I have an adjusted cost basis. So what I do is any options I sell and on any dividends I receive, I've started doing this for a few stocks. I will add that into my cost basis, which even further lowers it and further pushes up the yield on cost. So it's my little like non-GAAP accounting metric, right? Just adding in things where I want to. I don't know. So that's really interesting, man. Let's see, Mr. Market's perception of the cash system. No, yeah, hold on, Nels. I was talking about the market, right? Thinking that if Charter and Disney, if legacy cable goes by the way, if the bundling goes by the wayside, then Nexstar is just going to be a dying fit, like the salmon that at the end of their journey, it's just going to be puttering around waiting to die kind of thing. So I think that's where the market's starting to go, but I'm thinking this is going to blow over. There's going to be a long-term deal. I think Disney and Charter both need each other, and it's all intertwined with entertainment. For God's sake, we still have radio. Yeah, it's not as big, but yes. So I think Mr. Market thinks that their revenue stream is going to be reduced significantly in the future. I think the market looks ahead like 6 months, right? Today, I think I remember reading once that it said that what the stock price or ETF or whatever the market, whatever the price is today, is what the market assumes it's going to be 6 months from now, like what's going to be going on 6 months from now. So I think the market is kind of always looking 6 months ahead, not like 5 years or something like that. Nice, dude. I own Coke in the SCHD. So thanks that. With Pep. What did I say about Pep? Oh, just in general? Yeah. I think they're going to eventually, and I think they're going to wait for a pullback. They're going to get their what do they have, a 10% position in Celsius, or is it 12? I don't remember. In Celsius energy drink. I think they're going to eventually buy that and just bring that whole thing in house, but they've really helped Celsius out, plugging them into their sorry, I have this candle going. My God. I was going to pass out. I'm like hearing something. It's shifting. I'm getting to you people here. Almost caught up. I do apologize if I nice, Pat. Dallas is up. Has Tony Pollard scored? Let me know. Yeah, we won't get too much into football, but yep. Oh, the Bears look terrible. Just awful. And that's that. Cadence Bank. All right, man. We'll get into it. I'm not really a big bank guy, but Simply Safe, I'll just say it has it unrated. They cut during the great financial crisis. They have been raising their dividend pretty nicely. 1, 2, 3 raises since January of 2021. So you know what, man? It's again, banks are not my thing. They just look okay. I would need to know, if I were you, I would look into, because they provide commercial banking, I would just look into their commercial real estate and see what, they have some in Illinois. I haven't seen them. Yeah, they were incorporated in 1876, but I would look to see what their commercial real estate exposure is. And if you're okay with that, and, go from there. I'm sure Chat BGT, who's that? That's the one that us poor kids use over here in this part of town. Okay. Don't interrupt the guest. Okay, thanks. I like that, man. See what I mean? I asked that question so long ago, I almost forgot asking it. All right, good. You guys are talking football. I'm almost caught up. Here I come. Here I come. See, what do I think about DG stock? They're going to be fine. Yeah, I don't know. I'll just see what Simply Safe gives them as a score. But just retail in general right now is having a hell of a time. And yeah, they have a dividend safety score of 64, which is safe. And their current, I don't know, I'll show you. Dollar General probably has a more wider appeal. So for you, my friend, I'm almost caught up. You guys just spin through DG really quickly here. All right, so they get a 64 from Simply Safe Dividends. By the way, Kevin, oh my God, not you too many Kevins. All you Kevins are throwing me off. You're all blending into one giant Kevin blob. Oh, that'd be a creepy movie. What's wrong with us? Like the blob, and there's everybody's. It's one big rolling mass of Kevins coming to get you. Okay, dividend growth. 18%, 20-year CAGR, 7 point. Why did I not? What's going on here? Did I not share my screen, everybody? I did not share my screen. Well, it's been a while since that's happened, folks. But as I was looking at Dollar General here, you can see that my screen is now not moving. Wonderful. We'll just refresh that puppy right there. So they have a dividend save. There you go, 64. I thought you guys were looking at this. You know, this is, if I was given a presentation, I could hear you people. They'd be like, we can't hear it, or we can't see it. Put it on the screen. All right, there we go. So, sorry if this is too fast. 18%, 20-year CAGR, 7.3%. See, that's my safety net. I have my phone on right next to me, and I was like, hey, where's the Simply Safe page? 236, so they give a bunch of payouts. Yeah, that dividend yield, they usually have a really low dividend yield, which is why I've avoided them in the past. So check that out. 5-year average 0.86%, and their current is 116%. Again, I'm always going to preface it. This is ancient data. It just shows you where something's been. This tells us nothing about the quality of the business right now, the industry it's in, or where the business will be in 5 years, just looking at the 5-year average. But it can give you a feeler. It can give you a little bit of, I don't know, comfort if you think you're buying here. But if they were on their way to bankruptcy, then this would look awful. It could be a 10% yield. But yeah, so they had been as high as $260. But this is a little bit of a problem. Their free cash flow payout ratio the last 12 months, 539%. But analysts do expect it to be more normal. And I apologize if this is a little too small there if you're watching on your phones. But you can pause this if you want to study these a little more. Yeah, free cash flow per share came down a bit. They were really helped by the pandemic. Yeah, sales, everything. They were just, which they've been buying back shares, sales. Yeah, I love seeing these swoop down left, swoop up right. That's pretty cool. Money coming into the business, the total sales. Yeah, a little bit lower. Look how that's been declining. The ROIC, return on invested capital, and still good ROE. I don't remember if they have a lot of debt that can bump up the E part of the return on equity. So yeah, net debt to capital, 74%, a little bit high. And just a steep step down for the interest coverage ratio. So I think they're going to be fine, though. I've seen them. They're everywhere, all the little towns. And if you want, let's get I just, for my own fun, I want to see my own fun and games. I think the live stream sucks up a lot of bandwidth. So come on, buddy. Come on, spin and circle. You can do it. Hey, look at that. Where's my, what are we looking up? Dollar, I should have typed that in. Dollar General. Yeehaw with the Dollar General. $206 base case intrinsic value. And the worst case, they got them at $156.54. So according to according to alphaspread.com, they're saying that there is an almost 20% margin of safety on Dollar General. So the cheaper you can buy a stock, ladies and gentlemen, the bigger the margin of safety, the more potentiality for returns. That's why if you're buying a stock at the tippy top, at the nosebleed levels, you better be damn sure you all understand that business, because you're essentially buying with very little or no margin of safety. So this is telling us that Dollar General has a pretty, I'm not logged in. Anyway, I was going to show you some cool features on it. And with Alpha Spread, you can get 3 free looks a day, I think, is what they do. But, all right, enough. Actually, I do want to see one thing. If they are buying, because they should be, it should start filtering in the transactions here. We've had no sells or buys in the last 3 months. And the last one to buy, few buys, June 8th, 23. Michael Calvert bought. Okay. Director, CEO Jeffrey Owen bought on June 6th. So we have had some people buying inside the company. But overall, you see here 242 sales to 57 purchases with all the data here. So that's that. That's Dollar General. What do you guys think about Dollar General? Would you buy them? Do you think they're going to be okay? I think they're going to be okay. So there you go. There's a little bit more in depth than I wanted to go in on Dollar General, but again, a business that's very easy to understand. I don't think they're going anywhere. And it's a lot easier to predict their future cash flow, I think, because I don't think AI is going to radically alter how we buy from Dollar General. Still got to have those products, just, maybe the logistics help improve their business or something. Kevin Burgess. See, I got Kevin Burgess. We got, I don't know, there's 3 or 4 Kevins. Nike is doing their own distribution. Yeah, and that's why Foot Locker, they eliminated, try that again. They eliminated the dividend, right? And it still hasn't come back to me. I still don't remember what I was going to say. It was going to be good though. Does Chicago have a large Polish part of town? Used to have a buddy that used to fly there on vacation. They'd eat all the Polish food. Dude, I'm part Polish and part Czech. They're kind of spread out all over. There's not one like section or something, but yes, there is a lot of Polacks, and I say that in all due love and respect because I am a Polak. My God, they had we used to get Pulaski Day off for school. Kazimierz Pulaski. I had no idea who it was. He was a general in Poland at some point, I think, or maybe here. I don't know. We used to get it off, but you see, we start talking about Polish people in Chicago, and everybody leaves. Target. Chris, I don't think I'd say uninvestable. I would say it's probably going to be a lot longer of a wait. I mean, my opinion, you could be right, but yeah, I don't know if they've always kind of been like that, right? I think the difference between like what Bud Light did and what Target did is Target's always been more of a liberal left-leaning company, right? Kind of inclusive, diverse, all that stuff. So I think they just maybe went a little bit farther than normal for Pride. Because remember, this was all right before Pride Month. They're a business. They want to sell to their customers, and they know they have a lot of LGBTQIA plus, probably a couple signs in there or something, but Lord help me, I hope I got all that right. Or strike me dead. Still hit. No, that's an old Carlin joke. Yeah, I don't know. Do you guys think Target is uninvestable? I think they're going to be okay. All right. I'm almost to you guys. I'm getting there. I'm looking for something important. Oh, Harsha. Yeah, what's going on with the Chicago meetup? I need to just stop doing that. Maybe I'll look at, since it's not too hot, and I don't know if I'd like to do it in the city, So maybe somewhere off of an expressway. Um, I don't know, but I'll put a community post out. I'll put a community post out something. October is my favorite month, so I think maybe we can plan something for an October afternoon. Yeah, Schwab bought TD. Well, not Toronto Dominion Bank. Greg, they bought Thinkorswim, right? I think that's what they bought. Or no, Ameritrade. They bought Ameritrade, which owns Thinkorswim. So it was TD Ameritrade, and now it's just part of Schwab. So yeah, that would be pretty amazing, though. That would be incredible if they bought TD, though. Yeah, that's right. I don't know. I think I'm skimming by some of what you guys said. I'm glad you're talking it to each other. The shrink, I don't know what to do. I think it's going to take some jurisdictions to get really damn serious on people, as I've seen walking into stores with garbage bags and walking out full of merchandise like they're Santa Claus. And a lot of them, they're not even covering their faces or nothing. It's just like, okay, just a bunch of us are going to go and take. And, I don't know what the solution is, but businesses need, I remembered what I was going to say is that, and don't worry, I won't knock my head with it. In Education of a Value Investor, he says that he taught me that businesses, well, that only took 40 minutes, right? Businesses are complex adaptive systems like an ant colony. And he has a book that he recommends, which is on my list, called Journey to the Ants. And it's all about ant colonies and how they adapt and shift their strategy and things they're doing. So he was saying like investing in the market and investing in businesses is really similar, that these aren't just binary, automatons punching out code, doing things. No, these are living human. I know we're not going over the Citizens United Act here that said, right, that corporations are not citizens, but they are living, breathing entities. They are run by living, breathing human beings, and their first order of business is what? Survival. So all these businesses are complex adaptive systems, meaning that you can't predict exactly what's going to happen, what they're going to do, because it's like there's an infinite variety of variables that can affect a business every day, all day long. And then you have these people that are running the business that can almost make an infinite number of decisions. So it's kind of like the infinite and infinite mixing, which gives us the complex. And that's why it's so crazy to hear people say, this is where we'll be at 6 months from now. This is what the market's going to do. And I'm like, bull, like you don't even know what the market's going to do tomorrow. Nobody knows, which is what makes it awesome and just fun. I just love it. Yeah, I'm going to be doing this for a long time. So take a breath, everybody. You're welcome for looking at DG. I'm almost caught up. Shoplifting going to force retailers to take the Amazon model. Yes and no. I think a lot of them are going to have to put stuff behind lock and key, behind cages and glass, but we know that sales don't do as well when things are under lock and key. So it's going to be up to the businesses to figure out. They're going to figure it out. I'm going to be interested to see what they do and how they do it. But I do remember Brian Cornell, the CEO of Target, calling on government saying, we need your help. We can't do this alone. Like, we need the help of local and state governments to tackle the shrink and to tackle what's going on. And quite honestly, I know they denied it, but here in Chicago, I think this is why Walmart closed down 3 inner city stores, is that it's just too much crime. Like, the employees didn't feel safe, and there's just a lot of theft from inside and outside the business. And they're just like, you know what, screw it. Like, these are unprofitable stores. We got to close them. So we could see a combination of that too. Yeah, I'll show it for you, Be Still, because I like you. So be still. I'm going to go and do that real quick. I need to show you. So oh no, there I am. Oh boy. Technical difficulties. Yeah, don't worry about it. I'm coming back. There we go. Sorry, I'm screwing. We're getting goofy here. Can't even talk anymore. What did you want to look up? Waste management. I'm having fun. I look forward to this. I like it. It's our own little group. I was actually just telling Ryan Williams that he's get like 250 to his live stream. I was like, 100. Thinking about 100 kind of makes me nervous. Like, I love all you people, but that might be too many. I don't know. I'd have to get better at catching up. I'll breeze through this really quickly. Be still. Dividend safety score of 74. And you can pause all this. I'll just kind of go through a little bit. Solid company. Oh, I didn't even realize this. 32% 20-year CAGR. What? That is insanely fast for waste management. 23 years uninterrupted. 19. The street. Yeah, they're just going to grow it. Let's see their free cash flow payout ratios. Yeah, they're about 1% below where they are in the 5-year average. Not a big yield, but you see how they grow it. Free cash flow, huh? It's at 63% projected, 73% now. So it's interesting. I wonder what the less cash coming in or something. Higher operating expenses, maybe, but they were usually in the mid 40s for a chunk of those years. But yeah, actually, that's when rates started cutting. Look at that. So when we had super low rates, their free cash flow was their free cash flow payout ratio, meaning also their free cash flow was, yeah. All right. We don't want to spend too much time on this. Good free cash flow per share. They can pay the dividend. Though it looks like it'll come down. And yeah, down to 411 million shares outstanding. Nice job. Yeah, all these numbers look good. That's why they're very rarely ever on sale. A little bit of debt, but it looks like they've had that much debt. They've just been maintaining it. And let's get you an intrinsic valuation, because I'm dying to see now waste management. There they are, the DG deals. Come on, work with me now. Let's wait for the little thing to spin. I need there we go. Yeah, overvalued. Usually is. $146.80. And then on the worst case, $109.50. So pretty overvalued here, 30%. And that is waste management. But you got to pick your spots, pick your poison. Like my guy Harris Elliott is doing. He's buying waste management. He don't care. He says trash is cash. You don't like Schwab. Oh, dude, I like Schwab. Are you sure? I haven't tried to buy VTI, but automatic investing. Yeah, that's interesting. I guess we'd have to call them, but see what they would say. Always on sale. Yeah, I think they're going to be on sale for a minute. And I think as soon as the Fed gives indication of a pause, and then maybe that when they're going to start hiking rates, I think eventually we're going to see the yield seeking investors come back in. It's just a matter of time. I don't know when it is. Could be 6 months, or it could be 6 years, but they're a solid business expanding into Vegas now, and I just think they're going to be okay. So I'm patient. I could be a patient boy. I can wait. I am a patient boy. I wait, I wait, I wait, I wait. You remember that? Fugazi off repeater, I think. So, Frank, with the heavy dilution to investors, I would just say check it out, because almost every REIT has to, almost every REIT that I know of issues shares to bring in more capital to invest, because it can be more accretive to their growth, right? Because if a REIT wants to get more money, they are either going to have to borrow it or issue shares, which they can, I would say buy back. They don't, but it grows the business. So I'm not that worried about, share dilution with REITs, because they're just bringing in more money to grow the business. So yeah, there's more shares out there, but there should be more future dollars coming in to spread out amongst all those newer shares, right? All right, I'm almost caught. Geez, I'm not caught up. I do apologize if you Dude, check out the Acquired podcast where they talked about Target, 3 hours, something long. Just makes you want to run out and buy them. Target has 500 million in shrinkage. Yeah, I agree, man. I think it's going. Was it really 500 million? Half a billion? I think you might be right. I don't remember that number. It's not sticking in my craw, but yeah, and you're right, man. And the market has punished them for that. It's Costco also has less theft. Less. All right, almost to you guys. Any news today, Steve? I will do news here in a minute. Let me get caught up. We'll end this thing up with the little bit of news. I can't believe I got to get better at this. I have been behind you guys. I'm glad you're talking to each other, but yes, Kevin, I love your opinions. Business owners are adaptable like ants and bees. And dude, that is 110% spot on, Kevin, that the businesses are run. So obviously, and this is why the management team, as you point out, is just so critical, right? I love that. I am almost caught up. Good. Another video from Kevin's coming out soon. I'm almost caught up to you guys. I know. More cops in retail stores. Maybe that's the local jurisdictions. We'll see. Oh my God. They run with the whole rack of purses. Now they're not even bothering with the Santa Claus garbage bag, huh? PSA. Let's see. I'm going to look up the shares for PSA just to see what happened. I know they were willing to, they really pushed hard for life storage. They have a dividend safety score of 96, also a really high yield. Their dividend was frozen until they until they increased it. But I'm trying to do this quick with you. Shares outstanding. Nice. So 173 million in 2013 and last 12 months, 176 million. So they have not really raised those, diluted the shareholders that much. Yeah, TJX, right? TJX companies, I think is what it is. TJX is the ticker. Yeah. They've, good company. Agreed. Kevin has talked about this management team success. Yeah, I think return on ROIC is one of them. Operating profit. If a company, and you could take your operating profit and divide that by revenue, the money coming in, to see what percentage of after that dollar has been run through the funnel or through the screen of like selling, general and administration, research and development, things like that. If it's still, if they have a high margin like 20% or something, I think is really good of that. So yeah, I would look at operating profit, which is the second grouping right after revenue to give you your gross. Then you get your operating profit, and that is on the income statement. And that's literally just, you can see how efficient management was in what it takes for them to bring in $1, I guess, of revenue, if that's kind of halfway there explained right. Oh, thank God I got caught up to you guys. BTI. What is it? You guys see that? I'm seeing this, right? Hand pink face waving, turquoise covering eyes, face turquoise covering eyes. Looking BTI, 8% yield. You know, that's so interesting you bring that up, because I was just talking with Darth, who I don't know if you're still here or not, buddy. You see what I meant to do? I meant to hide the, I don't know if my sound cut off here. Yeah, I meant to hide the comment and I hit remove myself from the stream. That's twice. So I was talking to Darth about tobacco companies, and, you know, I'm having second thoughts. I know Buffett has never invested in them, but, you know, my wife and I have both lost loved ones to lung cancer. And yes, it's legal, but it harms people's health. You know, there's really no way around it. Is they harm the health of their customer. And Yeah, PepsiCo, Coca-Cola, McDonald's. Yeah, they all have sugary things that contribute to diabetes and products that consume that lead to heart disease. But honestly, I think when used in moderation, as apparently Warren Buffett is showing us, they'll be okay. You know, if you have your soda, I don't know, maybe not even once a day. I used to do once a day when I'm way back when, but I very rarely have soda now. But you know, they're putting out products that I think when they're over consumed, then they can be bad for the health of the consumer. But if you have a soda every couple days and a bag of chips here or there, it's going to be okay. It's a snack, you know. But I think if you have a couple cigarettes a day, even or even a couple cigarettes a week, it's still going to be really bad for you. It's not going to be good. So, any thoughts on knee? Trey, I had just talked to somebody about it. And are you a drummer, Trey? What are you doing in there? I think you're either drumming or you're on a swing. Maybe you're on a swing and drumming. Has anybody tried that? I know Tommy Lee had the ball where he's upside down and whatnot, but I don't think I've ever seen a drummer on a swing set. So get on it, man. Make it happen. Be the first one. Be the first swinging drummer. People will come to see it. But Nexstar Energy, very solid company, just kind of suffering with a lot of the utilities. I think they're going to be fine. Yeah. All right. I need to do news. So I'm going to do news and then pop on back with you guys. Oh, yeah, exactly, dude. So, and I know you got a guy smoking there, Frank, but this will always be the eternal debate to sin or not to sin, invest in sin stocks. And I agree. Too much Starbucks is bad. Too much Coke, Pepsi, and General Mills is bad. But I don't know, man. If you have 2 sodas a week and that's it for soda, and you also have, or 2 cigarettes a week and have no more, I'm going to think that the cigarettes would be more harmful than the sodas. Just my opinion. I could be wrong. I'm not. I do remember seeing that, man. It has been a bit. Oh, dude. So you are a drummer, yeah. I ain't never seen no swinging drummer before except for that Trey Corte. We're going to go see him. So swinging drummer. Come on, Grandma. Get your cane. We're going to go see Trey. I don't know. All right. What do we got to do? Some news here. I'm sorry, Trey. I got to hide your comment so people can have more screen when I do share it. What was Monday here? I got to select my tab. All right. I think I froze up there. I think we got the screen being shared. I don't remember Monday. Was it the 4th? I think I wrote that down somewhere. Here, why don't we do this? Where's my calendar? Come on. There we go. Look at this guy. He didn't know the 4th. All right, let me hide this. Go away. Okay, so Monday was the 4th. So this is why that bit of critical information matters, because when we go to latest, this is just simply Safe Dividends, some of their little news blurbs and things. And then I'm going to scroll down to the 4th. I want to give any away. So here we go. They upgraded Cisco's dividend from 70 to 80. So higher on the realm of safe in that bucket. 2.86% yield. Again, I'll go through these quick. If you want to read the headline, pause it. Enbridge, who are they acquiring? They are going to acquire something. All right, we're going to check really fast here. The announced oh, that's right. 3 of Dominion Energy's utility networks. So they are going to be bigger. And I think there's some debt they're using, but they reaffirmed their safety score. 8% yield, though. Very nice. Verizon raised their dividend 1.9%. Those little bitty raises, starting to slow it down. There we go. Dominion nears end of strategic review with gas utilities divestiture. Dividend expected to remain flat. So they're getting $14 billion for those 1/3 of the company's market cap from Enbridge. Interesting. See how that's going to affect them. I wonder why they're getting out of it. Then continuing with our gas theme, NJR, which is what, New Jersey something, I think. I don't know. 30 dividend increases in 27 years. Way to go, NJR. They raised it 7.7%. Vici, there we go. More Vici, 6.4% dividend increase. Loving my Vici with a 5.32% yield. Again, if you don't know what this means when it says we refreshed our outlook, they have human beings working for Simply Safe. They don't have an algorithm. Everything, from what I understand, is hand selected. So it's like hand carved by a chef, which is why they charge a little bit more. But they reaffirmed. So they looked at the company and the human beings said, yes, we reaffirmed the safety score of 67. And then Amgen, they refreshed, same thing. Their look on Amgen, 3.28%. And that's those guys there. And I'm going to just hear one more thing of what you guys said. Yeah, Russ, read Salt, Sugar, Fat. That's a book? I've never heard of it. And then you say I could see it selling. Yeah, that was the train company was Norfolk Southern with the East Palestine, right? Palestine, I think, where the train derailment was. I did not like how they handled it at all. I had just started a position and I sold out of Norfolk Southern. But yeah, the tobacco companies haven't really done anything wrong per se. It's just the nature of their business. I mean, now I know Walmart sells tobacco, but the way I think about it is Walmart is predominantly a grocer, a retailer, and they sell a little bit of tobacco. So put it this way, if Altria were to stop selling tobacco, they would go out of business tomorrow. But if Walmart stopped selling tobacco, maybe a little dent, they would be just fine. They would keep on keeping on. So I think when I look at a business like that, because tobacco is their main thing and it really does harm people. And it's hard because I'm more libertarian. I want people to do what is legal to the content of their hearts, as long as they understand the risks and everybody's in agreement. So, yes. You don't remember. You don't think you invest in Mo, do you, Craig? Plus, how many? Yeah, it's going to be interesting. Again, they'll be watching. But yeah, Shamir, look at this. Plenty of blame to East Palestine. Yep, I'm sure it's everybody, but as far as being on the ground, giving a statement, reaffirming, even if it's the boilerplate, we're really sorry. We're going to look into this. We're going to put right what went wrong. We're going to help the community out. You make $100 million donation to the local community. And it was like none of the executives wanted to go out there. They gave some the next day or two. I don't know, some note. Whatever. I didn't like it. I didn't like it at all. It really rubbed me the wrong way. All right, cool, Michael or Steve. I'm gonna read. I'm gonna write that down. Sugar. I could just take it. Yeah, sugar, salt, fat. Everybody, that's gonna be on our book list. Sugar or no, salt, sugar, fat. All right, we got it. We'll see what library has it. By the way, always get your books at the library. I've started taking notes. I created a spreadsheet. So when I read something now, should have done this all along. Cool thing. I distill it into a couple sentences, the thought. Yeah. Yeah. And I know a lot of you guys don't invest in tobacco stocks. And dude, that is perfectly fine. Personal finance, blah, blah, blah. You guys, that whole thing. And yeah, and I've thought about that too with J&J. Like, yeah, they've been responsible for some of the opioid epidemic, but yeah, pharma companies, right? Every company is going to have, no company is perfect. They're all going to have a flaw. Even Berkshire Hathaway, they have their foibles and flaws, to use a $10 word. But all right, beautiful. I love it. 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 We've made it. We've had, maybe this will be the weekly dividend. I don't know. Somebody send me a name, the weekly dividend communion or something. I don't know what you could call it. The weekly communion, something like that. Anyway, anywho, Harsha, if you're still watching, I will look at my schedule and I'll put something out. And do you know what it is, everybody? Part of it is my being uncomfortable, just being around. I know I talk to you guys, but you're real people watching, but your name's on the screen. And it's just that whole thing of actually meeting people face to face. But you are all cool. You're all part of the community. And I think that would be a lot of fun. So I'll work on that for those of you in the Midwest area that would, you know, there's a few of us here in Chicago area. But anyway, I love you guys. I really do thank you for spending a little bit of your time with me here. And again, there's a link below if you want to check out the portfolios I talk about. It'll take you, it'll whisk you away to the dividendtracker.com, dapperdividends.com. My wife has been working on the site. It's not 100% yet. There's still a few, little snags and things here, but because I'm so busy, she's taken on the task of redoing the whole dapperdividends.com website, and we're going to get some new pictures up, but it's good for now. And I do thank her for that. And yeah, if you haven't, sign up for the newsletter. I put in some good stuff that I'm thinking about that week, learning, looking at, reading, whatever. Do that and come back next week. I really would like to hang out with you again. So I will see you in the next one. So long, everybody.